Hello traders, the time has come to discuss how to begin a complex Elliott wave account. All right, how to begin a complex Elliott wave account. There are four types of corrections in the financial market. We have the flat correction, the zigzag correction, the triangles, and the combinations. So when we are talking about combination, so either a double zigzag or triple zigzag, or a combination of a zigzag and a triangle, or a combination of a triangle and a flat correction. Those are the four types of correction. And sometimes we may come across, all right, complex waves when it's quite challenging for an Elliott wave expert, Elliott wave practitioner, Elliott wave trader to identify, okay, the impulse waves and the corrective wave. I need to remind traders that professional traders hate complex waves. Why? All right, suppose, all right, you have $25 million trading account, and that $25 million are not your own money, but belong to your firm or to your client. And your job is to make money for your client as a hedge fund manager. And you are using Elliott wave. Will you be, okay, enthusiastic to just trade with a complex wave? No, you prefer the wave count, the wave analysis, the wave structures to be simpler. Yes or no? You prefer that. So you need to understand a professional do not like very much the complex wave, especially, remember this, during the fourth Elliott wave. All right. So a lot of professional traders do not trade the corrective waves. They do not trade them when they are complex corrective waves. So they stay away from them because they don't want to lose. So they want the complex corrections, all right, to be completed, to finish. So they may say, all right, now it's a zigzag, all right, and a triangle, or a double zigzag or a triple zigzag before they trade it, unless it's clear and neat to them that this is okay, the combination that is still that they have clearly identified the combination that is taking place. All right. But today we want to show traders how to begin a complex, okay, Elliott wave account. All right. So there are many ways traders you will see depending on your trading style, all right, your experience. A lot of traders may come up with different strategies to handle complex wave count. Personally, what I recommend to traders is to behave like a child. All right. So when I tell you now, okay, so what we will do to make it more interesting, I'll leave it to you to count wave from here up to this point here, between the two vertical lines. All right, so we're going to zoom into it a bit, and you can see that it's not very easy to count wave. All right, let me know in the comment section, okay, whether you have, where are we now? Okay, which wave are we in now? Are we in the fourth wave now? Are we in the fifth wave now? Are we in the third in the wave? What is going on? All right. It's not very easy straight away to tell me that we are now in a fourth wave, fifth wave, and so on. It's not very clear. And try to count wave and see what you can come up with. So hopefully what I'm going to recommend to you today will be useful to you. If not, all right, tell me if you find a better way that you are using to handle, all right, the complex Elliott wave. My recommendation is that if the wave count is complex, you have two choices. You may decide to stay away from it because you do not want to trade it. It's too complex. You look for another financial instrument that is exhibiting easier waves. Full stop. You don't want to lose, that's it. The second step, if you want to, okay, begin a complex Elliott wave, is to behave like a child. Okay, what do I mean by that? All you need to do, like is this here, just go, just draw lines, just start doing like a child. He went up like this, he came down like this, he went up like this, okay, and then he came down like this, and so on. Just do it like this, all right? Start with labeling the waves as you see it, like a chart. He went up, he went down. That's all you need to do. Keep doing that. Keep doing it. Just keep going. All right. Because you can't tell where is the third Elliott wave. You don't know whether the third wave is a complex wave, whether the fifth wave is a complex wave. Just start drawing lines like a chart as I'm doing on the chart here. Pull back a bit here. Okay, pull back a bit. Remember the tails, all right? And then it went up like this. Then it came back like this. And then it went up like this. All right? And then it went down a bit. All right? And then it went up a little bit like this. And then it came down like this. Yes or no? All right, try that and see whether that will be useful for you to begin your complex Elliott wave count. Then it went down like this. Then it went down like this. All right, now it's coming down a bit. All right, and so on and so on. So this is my recommendation, traders. If the Elliott wave count becomes complex, do something like this. And then try to see, now after you finish to do that, try to apply the Elliott wave principle, okay? Bring out, all right, try to implement the Elliott wave rules. All right, talking about Elliott wave rules. You're talking about the price structure, no violation of the Elliott wave principle. Next thing, try to recognize the pattern. Some pattern may be a little bit easier to recognize. Like here, as I put all this line on my charts, one of the pattern that is a little bit clear to me at this point in time, looking at this chart, a messy chart like this one. Going to color it now into orange. Hold on, please, traders. Hold on, please. I'll get back there soon. Change the color into orange. I know traders spend their weekend try to count wave, to analyze charts, so they may be ready for the beginning of the week. So they may identify the best trading setup that they can include in their bullish or bearish watch list. So this is what I recommend to traders to do when you notice that, I don't know where is what. Okay, there are another way to look at them. So you look at this pattern here, 1, 2, 3, 1, 2, 3. So this pattern in all this mess. So what we say to traders, when you have a chaotic situation, all right, you will look for something that is making sense. When you have a chaotic situation, you look for the minimum truth, something that is true in that mess. And with that little truth, you'll start filtering out, trying to put everything together. Am I making sense? All right. When there is a chaotic situation, look for a stable data. All right. So this one that I've seen here, yes, it looks like a flat correction here, isn't it? 1, 2, 3, 1, 2, 3. Because we know the structure of a flat correction is 1, 2, 3, 1, 2, 3, followed by 1, 2, 3, 4, 5 down. Well, what's going on here? Looks like it. So this one, I'm quite happy with that, okay? Okay? Now, another thing that I can see on this chart right now is that if you pay attention to this price action here, from here to here, you can see that the price went up, yes or no? 1, 2, 3, 4, 5. So normally an impulse wave will be subdivided into 5, yes or no? Everybody will agree, yes or no? Okay, everybody will agree. So therefore, it looks to me that this is an impulse wave. All right, let's put a line there. Color that into green. Looks to me that this is an impulse wave. No violation of Elliott principle here. A wave, a move that has been subdivided into 5. So looks to me that this is an impulse wave. All right. Look at this one. This has been a little bit extended, yes or no? All right. This has been extended. So normally, very often, is the third Elliott wave that is extended, or a third Manor wave of an impulse wave. Probably this is the third wave or the third Manor wave of an impulse wave. All right? Okay. Okay, now look at this one. What's going on here? All right. Now, this one here, you see the tail. You see, so we can't call this one the first one. Why? So we are applying the Elliott wave principle, because if you call this one the first wave, we will say that this one has cancelled because you see the tail come all the way here. Sometimes they may say, no, George, we can discount the tail, which we do sometime. But all right. So we call this one first wave. So what is the second wave? Is this the second wave? All right. So suppose I call this one a cancellation. All right. So went up, come all the way down here. I say, all right, should not cancel it. Violation of Elliott principle. I don't like it when the second wave come all the way to the beginning and has a long tail like this. I'm quite tolerant when it happened in the fourth Elliott wave with the long tail, but in the second wave, I will put a big question mark on this tail here. So, talking about my own trading style, I would prefer to call this one the first Elliott wave. All right, so where is the second wave? So the second wave is a corrective wave. Yes or no? It's a corrective wave. So where is it? Probably this one. Okay, let's call this one the second wave for now. For now, let's call it the second wave. So what do we have here? Suppose this one is a third Manor wave of the third wave itself, or suppose this one is the third Manor wave of an impulse wave. So in that case, we will say that, all right, probably an impulse wave, in fact, has started here. So first Manor wave, second Manor wave, third Manor wave, fourth Manor wave, and probably is this the fifth Manor wave. So what we are doing here, we are going one step at a time, trying to see whether we can finally identify each wave correctly. All right. So this is the first thing that you will do. All right. So now, but because we know that if we go to the higher time frame, we can discover new things. Okay, it will make more sense to us because I use the monthly chart for my wave count. I'm starting my wave count on the monthly chart as I'm doing here, but this is a complex wave count. So therefore, I will go also to a higher time frame like the yearly chart and start seeing what I'm going to do. I will remove my vertical line so I may see the chart clearly on the yearly chart. And look at this. We are now on the yearly chart, okay? So on the yearly chart, okay, it looks to me we have an impulse wave all the way up here. And then the correction down here. Why? You see here? It's a double bottom here. Price went down, went up, pull back. It's 1, 2, 3. 1, 2, 3. So this looks like an impulse wave on the yearly chart, followed by a second wave on the yearly chart, which is 1, 2, 3, a zigzag. So it looks to me that from here to here, to the beginning of our flat correction that we have identified on the monthly chart, so we may say that, all right, George, we have a bigger cycle. So the first wave of the bigger cycle is starting somewhere here, up, followed by the second wave somewhere stopping here, and the third area wave is right here. So the flat correction that we were looking at on the monthly chart, it looks to me it is the fourth area wave. Do you agree? Do you disagree? All right, it's your chance to put in the comment section. All right. Okay. Let me know. All right. If you can see the yearly chart and the monthly chart, try to do your own area wave analysis, because this is a complex area wave count. All right. And as I explained to you before, usually there are differences between the wave count from one trader to another, but the most important thing is that we do not violate the area wave principle. So it looks to me that things are making a little bit, are becoming a bit clearer to me. This complex wave is a little bit simplified as I switch from the monthly chart to the yearly chart. And it's become also clear to me now what is happening now. Okay, what is the current wave is the fourth area wave. Looking at the yearly, looking at the price structure on the monthly chart, we have a flat correction in this session here. It looks to me that we are in the fourth area wave. So, okay, with all these vertical lines still in place, all right, I'm going to go now to back to the monthly chart. Okay, and because I already draw my line like a little chart. And now I want to investigate, all right, because, you know, remember when you put the vertical line on the yearly chart and you switch to the monthly chart, you need to adjust the line because, okay, it should be here, all right, that's why it should be, all right, and this one should be here, all right, that's the correct way. So, according to what we have seen on the yearly chart, this session here, okay, is supposed to be the third area wave. But we know that this one is the first wave. Okay, in fact, hold on please to this. This is the first wave on the bigger cycle. This is the second wave that has ended here with this long tail. You see the long tail here. So what we were doing first on the monthly chart, you remember when we were talking about this tail here, that if we call this one first wave, and this one, the second wave, that will be violation. It's true, because in fact, on the yearly chart, the real bigger second wave is ending right here. It's ending right here. That's where the second wave on the yearly chart is ending. So what is happening now is that this move from here all the way up here is the third area wave, okay, of a higher degree when we are looking at the yearly chart wave count. So first wave, second wave, which has been subdivided into 3 waves, all right? And this is the third area wave, and now we are in the fourth area wave. Okay? So I'm going to color this now into orange, the third area wave. And what we're going to do, we're going to look at the internal wave of the third wave, because the third wave should be subdivided into, all right, 5 minor waves. All right? It makes sense? But one more thing, all right, because I've done my homework, to avoid that the video is too long, my friend, I can tell you now what we have here. We're going to move a little bit faster now. The second minor wave of the third Elliott wave, is also subdivided into three. Is this one here? 1, 2, 3. This is to go a little bit faster now. 1, 2, 3. Right there. That's the second Mano wave of the third wave. This is the first Mano wave of the third wave, the second Mano wave of the third wave, and the third Mano wave of the third wave. It has been subdivided into 1, 2, 3. It's not 1, 2, 3. It's 1, 2, 3, 4, 5. Because, one more time, hold up please, traders. I will show you, okay? I want you to get this right. Remember what we were analyzing one stock today. We remember that video, how to count in your wave one step at a time, all right? How to count in your wave one step at a time. In that video, we have a situation like this. You have a little bit of consolidation with a long tail. Be aware of that. A little bit of consolidation and a long tail. That session is the fourth Mano wave, okay, all right, of the third Mano wave of the third wave. Now you are confused. Don't get confused, all right? I'll get back to it in a minute. This is the fourth Mano wave of the third Mano wave of the third Mano wave. All right, all right. So, all right. So this session here. But if I'm going to color it now. Let's change this color into pink, and hopefully we can see on the weekly chart, because this has happened in 2013. So I don't think when we change time frame to the weekly chart, we cannot see this. But we're going to check whether we can see that pink section to investigate whether truly there is a pullback here or not. All right. Ah, yes, we have it. Pay attention to the pink section. So we were calling this, all right? You see, 1, 2, 3. 1, 2, 3 on a weekly chart. There's a pullback here. Okay, you see? Even this session from here, okay, in fact, should be from here. Even this session also has been subdivided into 5, 2, 3, 4, 5. All right? 1, 2, 3. That's it. One, 2, 3, 4, 5. Okay. First wave, first Mano wave of the third wave, second Mano wave of the third wave, and the third Mano wave of the third Mano wave. Color it in turquoise. Third Mano wave. It's becoming complex, my friend. As you can see. It's not easy, this wave count. All right. What are we? In turquoise. In turquoise. Quite complex, yes or no? We can zoom. If we can see the daily chart, we will have gone again from the weekly chart to the daily chart to zoom into each session and find the internal wave correctly for each impulse wave. All right, but because all this has happened in 2013, 2012, we can see them on the daily chart. All right. Otherwise, we'll have to go also to the daily chart to investigate whether what we are seeing here is making sense or not. All right, so first Mano wave of the third wave, second Mano wave of the third wave, third Mano wave of the third wave, and now we have the fourth Mano wave of the third wave, and followed by 1, 2, 3, 4, 5. The fifth Mano wave of the third wave is starting from here, is also subdivided into 5 Mano wave without any Elliott wave violation. So this is the fifth Mano wave of the third wave, which is also a complex fifth Elliott wave. So fifth Mano wave of the third wave, 1, 2, 3, 4, 5. All right. The fourth manual wave is also it's a complex. You can see it's a kind of a triangle here. Color it into pink. The pressure is on, my friend. You want to become an Elliott wave practitioner. This is what you have to go through. Will you quit? Do not quit. All right. So here it is. This is the fourth manual wave of the third wave. Going to put another vertical line there. Boom. And this one here. This is the third manual wave of the third wave. 1, 2, 3, 4, 5. Now, we can go a little bit deeper, going through the third manual wave of the third manual wave of the third wave. Don't get confused. The third manual wave of the third manual wave of the third wave. That will make it more complicated. So we don't want to get there. All right. So this is the second manual wave of the third Elliott wave. So we can see that from the yearly chart, we were able, okay, to decipher, okay, what is going on here. It's making a little bit more sense to us that this section here between the vertical lines, okay, this is our third Elliott wave, and now we are in the fourth Elliott wave, which is not yet finished. All right. So looking at the bigger cycle, going back again, my friend. Oh, where is the other line? We want to see everything. All right, cool. Hold on, please. Okay. I want to see the data on this side. Why am I not seeing it? It's not finished. Oops. All right. So when we go back to the, let's go back one more time. We are on the weekly chart. That's why we can see it. Okay, I thought we were on the monthly chart. So here we are. So on the monthly chart, you can see that we have the first wave, which was a long trending first, all right, followed by the second wave, which is 1, 2, 3 for the bigger cycle, and all this section here, what that I highlight with the orange, that's the third Elliott wave, which is a complex, really complex third Elliott wave, because the third manual wave or that third Elliott wave is also a complex third manual wave, and the fifth manual wave of that third Elliott wave, it is also a complex, a fifth Elliott wave. The second wave of that third wave, the second manual wave of that third wave is also a complex, okay, second manual wave. So we have a really complex third Elliott wave. All right? But you can see that by just drawing lines, as I recommend to traders, just drawing like a chart on a time frame where, okay, you prefer to start your wave count. I like to use, okay, the monthly chart to start my wave count, all right? And I start drawing lines to highlight all the way price went up, price came down, price went up, and so on the monthly chart. And I try to identify, to find a little truth or a stable data or an Elliott wave pattern. And the first pattern that I have quickly identified is the flat correction in the orange here, telling me that there is a correction. This is a corrective wave, all right? Then I notice also that it's a move up that was subdivided into 5. So I can understand that a move that is subdivided into 5 in the direction of the trend is an impulse wave. Therefore, I say, okay, this is an impulse wave. So this move down is a corrective wave. Now I see again 1, 2, 3, 4, 5. This is again another impulse wave without any Elliott wave violation. All right, and then it becomes clear as we went to the yearly chart that this session all the way up here down to this point, all right, is the first and the second wave. We could not call this the first wave because it's part of the correction. The correction, you remember the tail of this one here. Okay, the correction was ending here because we went to the yearly chart. All right. Okay. You see now? You see now? All right. Okay. All right. You see now? All right. In fact, the third Elliott wave, but because you remember what I was telling you, if you change time frame, that's why you have this vertical line here. But if you're on a yearly chart, you'll notice that the second wave has ended here. right here, the tail of this candle. But when you change time frame, because you see this candlestick bar, this one candlestick bar on the yearly chart is 12 candlestick bar on the monthly chart. Therefore, if you're on the monthly chart, your third area way will start here. All right, so now we know that this move up, that's the third area way. We are now in the fourth area way, which is a flat correction. How do you find this, my friend? Okay, how do you find this one? Okay, it's quite complex, all right? It's quite complex. All right, if you stop only on the monthly chart, you may know exactly what is happening by using a different time frame and just drawing line following the price, labeling the ups, down, ups, down, ups, down, and then try to see, can you recognize something? Can you see an impulse wave? An impulse wave is subdivided into 5 minor wave in a direction of the trend. Correction, minimum free, all right? So try to recognize the Elliott wave patterns, making sure we are not violating Elliott wave principle. Finally, we have decipher, okay, this complex, okay, a price, a structure. Hold on a second, please, traders. I need to do something in a minute. I will be back in a second. Okay, traders, what's the next step now? Okay, so we have identified all the way, first wave, all right, trading first, correction, no violation of Elliott wave principle. One more thing that we can do, my friends, in order to, okay, polish our Elliott wave count, our complex Elliott wave count, let's try to apply, okay, because if we zoom into this session, you will see that there's a lot of things going on here, though you see like this, all right? It's quite messy here, but let's try to, because we don't want the video to be too long, otherwise, okay, my friend, so let's try to apply a Fibonacci extension to our so-called first Elliott wave. We can go a little bit deeper, more and more, to make sure that everything is ID up. But we can just go very fast to see whether the third Elliott wave has been extended or not. You can see that it has stopped at 161.8%. You see, that's where it has ended. Okay, at 161, it went a little bit above it at 161.8%. Fibonacci extension level of the first wave of a higher degree. So therefore, we will say that we have, though this is a complex, all right, third wave, we will say that this is a normal third Elliott wave because it did not, okay, it was not extended beyond the 161.8% Fibonacci extension level of the first wave, though it is a complex, a third Elliott wave. All right? This is a normal third Elliott wave according to the Elliott wave principle because it did not go beyond the 161.8% Fibonacci extension level of the first wave. But it is a complex, very complex, in fact, all right, very complex third Elliott wave to decipher. All right. Okay. All right. So we are now in the fourth Elliott wave. It's a flat correction, fourth wave. So one more thing I can quickly check. All right. Okay. Going to one more thing I want to check. Okay. So we have a normal third Elliott wave, a normal complex third Elliott wave. Can we say that? Okay. Here we are. Hold on, please, traders. I want to check something quickly for myself to see what's going on here. All right, so okay. So now that we apply Fibonacci extension to the fifth minor wave of the third wave, all right, we can see that the flat correction that was developing now went a little bit up above the high of the third Elliott wave. Well, let's zoom into it. Oops. Let's zoom into it so everybody can see it. Did it? All right, let's see. Is it above? Yeah, it went a little bit. You see, it went here. That's the high of, okay, the B part of the flat correction. So from here down to this point, that's the B. That's the correction, traders. Let me drink something first. Maybe I'm getting tired now. Very good. So this session from here down to this level here, that's the A part of the flat correction from here, 1, 2, 3, all the way up here. That's the B part of the flat correction. But because this flat correction went up to the 138.2% Fibonacci extension level, which is here, 138.2% Fibonacci extension level of the fifth mono wave of the third wave. So this is the fifth mono wave of the third wave. We apply Fibonacci extension to it, and the 138.2% is right here. All right, we will clearly see that we are dealing is quite close, not in that zone. All right, in that zone, I will call this one an expanded flat correction. So the C part of that flat correction is still underway. Should come down 1, 2, 3, 4, 5. Okay, I move a line. So forgive me today. I move a line now. Okay. All right. Should count down 1, 2, 3, 4, 5. Okay. 1, 2, 3, 4, 5. It's usually a messy move. The way the 5 waves down should be overlapping. Apology to traders. Should be overlapping. Boom, 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 boom. The minimum target that we should set is somewhere near the low of the A part of the flat correction. Somewhere in these zones. Call it in the zone of $73 and very conservative, and $66, somewhere in that zone. That's the first conservative target that we should set for the end of the C part of the flat correction. Sometimes the primary change direction before that, you may see a tiny 1, 2, 3, 4, 5 without even coming to this zone. You may say, Joe, what were you talking about? Okay, now this to make you laugh a bit. Okay, so anything is possible, but according to the Elliott wave theory, the first conservative target for the C part of the flat correction should be somewhere near the low of the A part of the flat correction. But the greediest target for the expanded flat correction is this. Okay, hold on please. We need to apply again Fibonacci extension. All right, to the A part of the flat correction, and we will be highlighting. All right, we will be highlighting the zone between the 138.2% and the 161.8% Fibonacci. All right, Fibonacci extension level of the A part of the flat correction, and that zone is between $54 and $47. But remember, this is what we are talking about. When you are counting area wave, all right, especially a complex wave like this, you need to go into the mind of other traders. There is always a mind game in the financial market. So because this session here got a long tail on the monthly chart, but if you go on the weekly chart, you see all this candle coming down. If you're on the monthly chart, what you need to do by setting the target here between the 54 and 47, you will try also to play the mind game, my friend, by just using the Fibonacci, all right, extension to the closing price. Here, this is the closing price. So instead of applying the Fibonacci extension all the way down to this low, you'll also try to figure out how other traders that are drawing their Fibonacci extension to the closing price will have set their target. So they will have set their target right here. You see, near the low, you see, between the 138.2% and the 161.8% Fibonacci extension level of the A part of the flat correction. This time, by drawing the Fibonacci extension like this, we are stopping at the closing price, of the A part of the flat correction instead of the low of that A part of the flat correction. So some trader will be monitoring that low between the 68 and the 64. So this is about the mind game. So though I know that the conservative target is somewhere in this zone near the low, which I have, I also apply Fibonacci extension going to the mind of other traders, and I know that they will be watching their 138.2% and the 161.8% Fibonacci extension level of the A part of the flat correction in the zone of $68 and $64. But I also know that if I set my Fibonacci extension all the way to the low, then I will be watching 54 and 57. You want to know, and you want to be ready for it. So suppose the flat correction, as we are expecting it, all right, what we are doing here, now we are forecasting how that flat correction may end. it is an expectation. All right, the price right here can just go up. Okay, and you'll be saying, George, my friend, you said that it's going to go down 1, 2, 3, 4, 5. What's going on here? Well, follow the price. Okay, follow the price. Okay, one step at a time. Suppose our expectation is fulfilled. Okay, that will be good, yes or no? Then we will be forecasting the fifth wave starting somewhere in this zone. If it stop here, or if it stop here, I will use the conservative target 68.57 and 64.58 first. All right, so kind of 1, 2, 3, 4, 5. Try to check the structure of this price move. Those wave, a corrective wave, can overlap each other. This is not an impulse wave, 1, 2, 3, 4, 5, so can overlap in each other. Okay, all right. So here we are. If you stop here, then we will be seeing the fifth wave up. Okay, what else can we say about the fifth wave? So we have a normal third area wave, but as you can see here, our first area wave has been extended. According to the area wave principle, okay, we can have the first wave or the third wave or the fifth wave being extended. All right, now we see that the first wave has been prolonged for a long time. All right, many years, 1992 up to 2000. All right, you see 8 years gone, and now we have a correction that also been prolonged. Okay, you see the second wave has been prolonged. Talking about the time, you see the time it takes for the second wave to be completed from 2001 to 2010. 9 years gone. Okay, longer than the time it takes for the first wave to be completed. So we have the second wave that has been prolonged, talking about the time. We will now refer to the area wave principle, the alternance. You like that word, isn't it? The alternance between the second wave and the fourth wave, because the second wave has been prolonged. This is the corrective wave that has been prolonged for a long time. There is a high chance that the fourth wave will take a shorter time to complete. And it's true. It's true here. It's not going to take the fourth wave 9 years to complete, as it happened here in the second wave. It will be taking shorter time. You see here, 2015. We are now in 2016. Okay, so somewhere, okay, by gradually, it will be completed, but it won't take 9 years as it was here, based on the area wave rule that stated that there is often alternance, all right, between the second wave and the fourth wave. All right, so sometime, okay, so because the first wave has already been extended, we may have a normal fifth wave. But surprise, surprise, my friend, sometime you will also see that two multi-wave may be extended, either first and third wave, or either first and a fifth wave, or either third wave and a fifth wave. But you will also notice that some trader may be saying to you, only one of those waves can be extended. Anything is possible in the stock market, all right? So now we see that the first wave has been extended, so we know that, okay, all right, it's normal for the first wave to be extended. Okay, let's see what's going to happen. So our first expectation is that we are likely to have a normal fifth wave that is not extended. But don't be surprised if the fifth wave is also extended. Another rule is saying that if you have a flat correction in the fourth wave, there's a high chance that we may have a complex, all right, a complex fifth area wave, or the fifth wave may be extended, making it quite challenging at this point in time to forecast the fifth area wave of this Baidu. Oh, this is not Baidu, by the way. This is automatic data processing stock, ADP. So if you trade Forex, you should know ADP. We have ADP data the first Wednesday of the month if you trade Forex, and that data will come before we have the real unemployment data on the first Friday of the month. All right, that's why we say to trade it. The first week of the month is quite challenging. So on Wednesday, the first Wednesday of the month, very often we have the ADP data. If you are trading stocks, currency, or commodity, be aware of the automatic data processing, ADP. All right, ADP data on the first Wednesday of the month. This is the company that give that data, all right? ADP, okay, automatic, all right, oh yes. Okay, now this is to make you, all right, laugh more. Okay, so here we are. So we will be expecting. We will see. All right. So because I don't want the video to be too long, we can forecast. All right. The end of the fifth area wave using what? Okay, area wave channeling. All right, area wave channeling. So in order to forecast the end of the fifth wave, the fourth wave should be completed first. All right. So it's not completed yet. So we can't forecast the fifth wave. But if we assume, all right, which we shouldn't, if you assume that the fourth wave will end here, we'll connect the low of the second wave and the low of the fourth wave, and we draw a line, okay? And then we will choose another line. We'll choose the high of the third area wave, and we will draw a line that is parallel, okay? That is parallel to the first line, having this channel like this. So we'll be saying conservative measurement somewhere on the edge, somewhere, maybe it can be extended like this and touch it on the edge of that channel. But sometimes we say like this, some will say like this, somewhere like this, on the edge of this channel. And if it goes like this above that channel, what do we need to do? We'll use market geometry, measuring the width of this channel, and projecting the direction of the price, and drawing another line to this point that is parallel to our channel, okay? And we'll also pay attention to the median line, okay? So there are many ways that we can forecast the fifth wave, but we will prefer the fourth wave to be completed now. But there is another method we can use using the magnitude or the amplitude. So from the low, all right? From the low, all right, of the first wave to the high of the first wave, you will calculate, okay, the amplitude of that price move, so the high minus the low. That will give you the amplitude. You multiply that by, 61.8% or 38.2%, and you add it to the low of the fourth wave, which is not yet completed. The low of that fourth wave is not yet completed. Will it end here? Will it end here or somewhere else? We will see. All right, so this is the end of this tutorial about how to begin, okay, a complex, okay, Elliott wave count. All right, as you can see, it was a complex wave count. The third Elliott wave is a very, very complex wave in this case. The second Manor wave of that third wave is a complex wave. The third Manor wave and the fifth Manor wave of that third Elliott wave are also complex waves, all right? And now we have also a flat correction that is in place here, all right? The second wave, okay, is a complex wave subdivided into three, and so on and so on. It was not easier for us as we were on the monthly chart initially trying to figure out where is the first wave, where is the second wave, where is the fourth wave, and so on. It was not easy. But as I told you, my recommendation is very simple. Just start drawing line. It went up, went down, went up, went down like a chart, and then try to see if you can recognize an Elliott wave pattern, especially the impulse wave. The impulse wave will be subdivided into 5 Manor waves. You need to use different time frames. Like you can see, we went to the yearly chart. Oh, it was easier a little bit there. And then we start putting, okay, all pieces together, and we come up with a decent wave count, though the wave count was complex, all right? So if you are an Elliott wave student or an experienced Elliott wave student, we want to know what you think of this complex wave count, all right? And how you would yourself have proceed. Do you have a better way to look at it? Let us know in the comment section. If you have any question or comment or suggestion, put in the comment section. And I always read the comment. Trader may think that, oh, you do not read the comment, you don't reply in due course. Be very patient, all right? Be very patient, all right? Because we have a plan for this channel, and we are coming to the end of the year. There is so much to do before we hit that 12th of December, okay, the final line for this year 2016. Okay, so we need to catch up and put our channel in order before that date. All right, so thank you for watching, okay, and we wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders, talking about how to begin a complex Elliott wave count.